All right, good morning, subscribers. It is Tuesday, March 11th. Hope everyone got through yesterday's ultra boring trading day, which is really just the second boring trading day in a row here. We were actually the fourth one in a row, really. We only had one interesting trading day, and that was last Tuesday. It was all about buying the dip. As I said yesterday, basically we continue. If you sort of look back over the past few weeks, we really just had, sort of a cycle of essentially mostly boring trading days and to maybe one, maybe two or so trading days each week that gave us a little bit of action. That is a nice rhythm. It's also why the portfolio year to date is up about 7.5% because this rhythm has worked out very well. So I want to be careful and watchful of this whether this ribbon's going to change, but so far it's been working very well. So it does feel like I said yesterday on the S&P, that we're going to hit or move toward the 1900 area first before we see, say, 1850 and 1840 again. And so 1900 is a little more than a percent, maybe a percent and a quarter away from Monday's close. So that's sort of what I'm looking at. QQQs, the Nasdaq 100, a little bit more choppy, but here too, nothing dramatically weak or bullish. It's just kind of neutral trading action. Russell 2000 via the IWM, same exact thing. More importantly, though, I'm starting to see a trend develop again, like I saw last week and later in the last week, is that the indices and the sectors and the various industry groups are becoming less interesting to trade as a group, and it's getting more interesting to trade single name stocks. So from an analysis point of view, from an execution point of view, in terms of the trading I'm doing, it's not changing a whole lot, except that any ETFs I wanted to trade before, I'm now basically not considering anymore. It just means that the analysis is now based more off of individual stocks as opposed to groups and sectors. If this doesn't make any sense, please let me know. I'll be happy to explain it more. But it's basically just a rotation we continue to see sort of, every few weeks, maybe every couple of months or so throughout the year, that the indices sometimes become more interesting to look at through an analysis point of view in the various groups, and then sometimes it's just individual stocks. And I think we're again getting to a point where, at least for the time being, and this could last as little as a couple days, it's more interesting to look at single name stocks. So let's have a look at the portfolio quickly. Starting off with ABX, which is just the Bear Gold mining stock. It's continues to just be frustrating and not doing anything, but that's because gold's busy not doing anything either. Those two are highly correlated. But through the lens of this chart that I keep talking about, this stock is still holding in. My stop's at 19. It's just retesting the breakout level, basically, is what it's doing. My stop's at $19. If it doesn't do anything here anytime soon, I'm going to get out and happy to entertain it again alongside. We talked about Joy Global. These guys make mining equipment. Yesterday, it's a stock that if it can break past resistance here around $58, I think the stock looks really good. And alongside, it's got a major and very defined resistance area here. You can draw it many different ways, but I think $58 comes in most areas. That's an interesting one to watch as well. But again, that's not going to do anything until the miners and gold itself are probably going to move up. So other stocks in the portfolio, Soda. I bought Soda yesterday, SodaStream International. We talked about this yesterday morning as well. Basically, the stock has just created a very important higher low here last week. Yesterday, it broke past the 50-day moving average, which is this yellow line, and is also sort of pierced past lateral resistance more or less. It depends where you take this lateral resistance. I would argue it already broke past it yesterday around $42, which is I think what was my original entry area interest anyway. So at this point, the stock's going to be approaching the downtrend resistance from what is this, last November here pretty soon, but we'll see how it acts. It looks like the upside momentum here could take the stock into the mid to high 40s. We'll keep it watching. It's a good momentum stock if and when it gets going. Otherwise, what else is in the portfolio? Let's have a look here. I keep holding on the short side to Line, which is Lin Energy. Yesterday, the stock had a bounce. We shorted this on Friday, so I need to see what happens here. But the stock really has, still it's broken this this uptrend line here, and it looks like it can continue down to the 200 day. So that's another stock. Then potash on the long side, holding in there but not doing anything dramatic. It's this is one where the industry still looks good there. So if you compare it to Mosaic and Monsanto and some other stocks like I talked about last week, continues to look pretty good. It's got immediate term resistance here, and I think it may have it's just trying to consolidate basically the rally that it had here last whatever that was last Thursday or Wednesday, whatever. This big breakout rally out of this resistance point here, out of this bull flag pattern past the 200 moving average. So that still looks pretty good. Abercrombie on the long side stock is doing the same exact thing basically as potash. It's just consolidating above the 200-day. Nice tight pattern. That's what you want to see. If it breaks below this area, that sucks. If it breaks above it, that's what we want to see. Tesla. Again, I'm still short Tesla 280 strike. June calls. The stock keeps coming down here. I'm not quite sure it's going to fall apart here. It seems like it's going to try to maybe hold in and form some sort of higher base and maybe push higher again. So we'll have to then adjust that options trade. If it does fall down to 220, 200, then all the better. I'll get out of the stock, the short calls, and take my profits. And I think that's all that's in the portfolio. In terms of things that I'm going to watch today, two things. I'm going to go through them also in the daily watch list. Buffalo Wild Wings looks like it's ready to break past a triple top. I'll give you a better chart on this in the daily watch list this morning, but you can see the resistance area here is pretty clear. If it gets back above 152 or whatever that resistance point here is, I'd definitely like to go long on the stock towards 160. And then VMware, VMW is at a longer term resistance area dating back to May 2012. It's sort of cuddling or curling up underneath this resistance area here, also forming a pretty tight pattern. All of which is just a testament to the strong support that it had here just last week off the 50-day moving average and some other support down here as it moved higher well in a technical formation. Hope this makes sense. Any questions, as always, please let me know, and good luck out there today. Take care.